Hello and welcome to the special episode on Union Budget 2026 by the Economic Times and ETCFO.com. ETCFO and ETBFSI.com by the Economic Times. My name is Amol Dete, and I'm going to have top voices from the BFSI world, the finance leaders, who's going to tell us what is their first reaction on the budget, and more importantly, how do they see the budget impacting the whole Indian economy and the finance world. So let me begin with none other than Mr. Neetu Saxena, the MD and CEO of Bank of Maharashtra. Sir, glad to have you on this show.
Good afternoon, Amul.
So let me begin by asking you a very simple question, sir. First, how do you rate the Union Budget 2026? What are the pros and cons, according to you, of the Union Budget?
Yeah. So, Amol, if you see the overall proposals in the Union Budget this year, I would say it is yet another good budget country has seen. And what it reflects is there is a policy continuity very clear. There is a lot of fiscal prudence which is getting exercised. And what the budget is doing and trying to attempt is to lay foundations. Right structures are going to get created, which will actually sustain the India's long-term vision of being a Viksit Bharat, a developed nation. So if you ask me how I should be rating the budget, I would say it's a measured, a growth-oriented, and growth-centric, reform-oriented budget.
Okay. Noted your point, sir. In fact, the government has came with this word called Reform Express, and they're trying to embrace that as a thought in this budget. But now a specific question to you, which is absolutely related to the banking. The government has decided to form a banking committee, a high-level banking committee, to lead the whole finance sector towards 2047, which is the goal of Viksit Bharat. What do you think will be the agenda of this committee? What are the issues you think they will handle? And how do you see the whole committee shaping up? What are your observations, sir?
I think this is yet another essential step which has been taken with not a short-term but a medium to long-term view. Any development in the economy that has to take place has to be supported by the banking that will be available there. So what is being attempted, I feel, is to look at holistically, to look at structural level changes. While the terms of reference have not been clearly communicated, but definitely the way it is being, what indications are coming, that it will not be a mere incremental change that is being looked at through the deliberations in these committees. But we would like to probably be seeing, we would be getting to see major recommendations that will cover the entire expanse of the banking sector. So how the sector is growing, not growing, what are the impediments in the deposit growth, in the credit growth, in the governance, in the technology. Holistically, this banking committee should be looking at. I would not like to comment upon individual because terms of reference is yet to be known to us. But this is what I feel the committee, high-level committee on banking, would be looking at how banking would be there in 2047 and what roadmap it will take from here to 2047 is what this committee would be essentially looking at.
Certainly, sir. One more question that immediately comes to my mind. Again, government might share the whole agenda of the meeting itself, but being a veteran banker, what is your guess? Do you think, because it's on government's agenda to make a global banks, it's not that we are not there, but the presence is still minimal. I think the government wants Indian bank to be in top 10 in the global list. Do you think that will be an agenda? Do you think perhaps the government will also look at license far more, flexibly, the whole license regime, something like that? Do you think could be a possibility?
So Amol, when I'm saying the entire expanse of banking will need to be looked at, if the country today is having a vision of being a developed nation in 2047, they've even gone down to say that this should be an inclusive development. it should be a sustainable position that the country should have. It should be that India is globally competitive in 2047. With all
Right.
these things, the banking and every aspect of banking will need to be looked at. Not only, as I said, credit deposit or the technology, but the governance, the risk culture, entire ambit of things, and within which how the ownership and the voting rights and all those things,
Right.
I think can be or would need to be looked at when we are talking of the aspiration of being a developed country by 2047. डिस्कनेक्ट हो गया ना.
I think there was some network issue, sir. I guess the god of network is not in favor. There was some network issue. I heard you clear about your banking, sir. I just want to have one more minute with you, and very quickly on the MSME side, the government has also launched a SME growth fund, and I see a strong focus specifically on the new age businesses as well as the MSMEs. How do you see that aspect shaping up, and how important it is for the Indian economy right now?
See, the role of MSMEs, we all have seen that they have been, in terms of numbers, supported the Indian economy in a very, very major way. If you look at the exports, if you look at the contribution of MSMEs to the GDP, you may take any parameter, it is also a big employment provider to the country. And what this budget probably is also trying to address is structurally do two things incrementally through the MSMEs: support the economic growth, also look at the creation of employment opportunities. So, with the development of MSMEs, with around almost 7.5 crores of MSMEs, they employ 33 crores of Indians work there. So the point is, when they look at developing of MSMEs, they are contributing to the economy of the country. Also, structurally and sustainably solving the employment issue that we are trying to improve. So these two elements, and also the MSMEs or the growth of MSMEs can bring is the regional growth also would be seen. When the MSMEs, which are scattered from length and breadth of the country,
Right.
and they are growing, so we will see that tier 2, tier 3 cities, new employment opportunities are getting created through this expansion of MSMEs. And the budget clearly has laid a lot of emphasis on the MSMEs to, we can talk about the 10,000 crores SME growth fund. We can look at strengthening the credit guarantee schemes, or
Right.
the emphasis which has been laid on the trades development.
Sure, sir. My other speakers are also joining one by one. But before I let you go, just one quick question. Do you see private capex picking up this year?
So while this is something we all have been very keenly waiting, discussing, I think from the government, a lot of enablers have gone. The government has also done front ending in this capex, and
Right.
yes, we are yet to see in real terms what the private capex cycle we would like to have in the country. So maybe it is yet another 1 or 2 more quarters. But I think enablers and creating that ecosystem, the right environment,
Right.
is a continuous endeavor from the government to see that private capex cycle also takes up its shape, and that has a good significant role in the growth of the economy.
Certainly, sir. Thank you so much for sharing those meaningful thoughts on this particular platform on the Union Budget. Thank you. Thank you so much for your time, sir.
Thank you for having me.
Thank you. Now let me move ahead, dear readers and viewers, with another speaker whose name is Mr. Nilesh Sathe, the former member of the IRDI, and he was also the MD of LIC. Nileshji, good to have you, sir.
Thank you. Thank you, Amol.
So there is nothing specific, sir, for the insurance in this budget. Perhaps government must have thought in every budget there is something for the insurance, maybe good, bad, right, wrong. But still, I think there are certain provisions on maybe ease of living, for example, Motor Tribunal Act or something, which will indirectly benefit through insurance, maybe to the investors, the customers at large, or the policyholders at large. But first of all, how do you rate the budget? How do you see the budget?
No, I will say that the budget is a balanced one. The equity market did not respond well just because of STT, but anyway, that will be short run. But overall, I will say that it is a forward-looking budget, and it's going to shape the economy as such. It's not just a one-year plan, but we have seen a lot of things which are being proposed from long-term perspective. And IT sector is given the support needed through the tax holiday for data centers and cloud services. Infra outlay is very good at 12.5 lakh crore, which is quite good. Veterinary colleges and sea aeroplanes and and so forth for tourism, medical tourism, all sorts of, and railway also, a lot of corridors are being proposed. So what I mean is, it's not just a one-year budget. It is probably looking at something beyond that, because Viksit Bharat, as has been said, that. And secondly, Amol, I really fail to understand why do we give so much of importance to the annual budget, because abroad it is just a routine exercise.
Right.
We unnecessarily look at, because something will be given to me, whether the middle class will get a benefit or the rich will become richer, poor will become poorer. It has no meaning. Actually, it's an exercise which is to be carried out, where from the government is going to get funds and how it is going to spend. So maybe some areas may be given more importance, like defense may be given more importance, or power may be given more importance. But that is okay. It depends on what focus the government wants to give in that particular year. But expecting a change in income tax slabs every year, or expecting some relief in long-term capital gain or short-term capital gain every year, and then saying that sorry, this has not come, madam did not pay attention to our requirements and all that, has no meaning. I am personally of a view that budget should be looked at as a routine, normal exercise which the government has to undergo.
So people should not play with the market on that particular day.
We create hype unnecessarily.
Right. Okay.
So that is my
no, certainly noted your points, sir. I agree on certain parts for sure. But tell me something about insurance. The government has done a lot. They increased the FDI. They let other players come into the insurance business. How do you see that actually shaping up now? Because the whole idea was, until we reach 2047, because in Bharat everyone should have an insurance. Do you see it happening? Are we heading in that direction?
We are heading in that direction, but things will not happen so quickly, for the reason.
Right.
Just because you have made 100% FDI in insurance doesn't mean that tomorrow there will be hundreds of companies which will be keen on coming to India and opening their offices. It doesn't happen like that.
Right.
We also will have to evaluate where to open, when to open, and even if they are allowed 100%, it's not that they are not allowed less than 100%. They may be finding some good Indian partner in starting a joint venture who may be quite good in finances. So that is also. So let us wait for a while. In this particular budget, one provision which is made on MACT is, in the past, the motor accident tribunals, they used to give decision after 4, 5, 6 years, and a lot of interest was also paid. Now this interest was considered as income and taxed accordingly. There was TDS also. These two provisions have been removed here. One, this interest will not be considered as income. And second, there will not be any TDS. So this is definitely, all said and done, the bereaved family is getting some relief. and getting interest only because the amount has not been paid on time.
Right.
So why should you consider it as income?
Yes.
It's a good decision which has been taken. I will say that the interest on MACD claims has
Hmm.
been exempt from TDS as well as from income.
Okay.
So this is only
Yes.
one
Yes.
change which has happened in this budget.
Yes, yes, certainly, sir. I think I will move on with other speakers and get one by one. But thank you so much for sharing those meaningful thoughts on this particular platform and telling us what exactly you think about the budget. Thank you so much, sir.
Well, thank you very much.
Thank you. Let me move on to my next speaker, dear friends and the readers, who is a veteran in the industry and perhaps must have decoded the budget in a far more meaningful manner because he's the chief rating officer of CRISIL and also the senior director. Please welcome Mr. Krishnan Sitharaman. Krishnanji, good to see you. Good to have you on this particular show.
Very good afternoon. Amol, great to be on the show. Thank you so much.
So, how do you rate the budget? That is my first question.
Sure. I think the union budget, the way I look at it, comes with a two-pronged, long-termistic approach. That's the word I have coined. There is a strategic prong which will continue to pave the path for Viksit Bharat by 2047. And then there is a tactical prong that entails facilitations and reliefs to spur growth of key subsegments amid what I call a paradox of global headwinds and domestic tailwinds. Now, the emphasis on infrastructure and financial sector continues. We have strategic and frontier manufacturing sectors have been incentivized. There are reliefs and facilitations for SMEs. There is a move to deepen the corporate bond market. For the tariff hit sectors like textiles, there are some measures for short-term relief as well. So a number of nuts and bolts are there. I don't see any big bang announcements, but a number of nuts and bolts, I would say brick and mortar kind of a budget, but brick and mortar are key ingredients of a very strong and resilient building. So that is important. For instance, a number of key measures were announced off budget. For instance, the GST rationalization, which took effect from September. So if the GST did not happen then, and would have announced along with the budget, then people would have called it a very big bang budget. But that has moved out, and now we are having a lot of nuts and bolts, small pieces putting together, paving the path for Viksit Bharat.
Certainly, sir. I think Vikasit Bharat has been the central theme for I think the budgets they are bringing and the rationalization with the taxation or whatever the policies they are bringing. In fact, Reform Express has been also the theme. But let me come to you with a very specific question, and I'm sure you study a lot about economics, rating companies, and also the global funds. The basic issue that India is facing right now is the FDI. Obviously there were a couple of deals that happened, but it's still not at the level which we were expecting. Rupee also collapsed a lot. So do you think by any chance, while everyone is saying it's a balanced budget, it's a moderate budget, do you think this budget pushes for foreign capital? Do you think global investors will look at India far more positively after this budget? Do you think so, sir? Or what would be the changes do you see in the global environment coming to India specifically with the capital?
Sure. I think we need to keep in mind, as the previous speaker was also saying, that the budget is one part of the financial ecosystem or financial measures that happen from time to time in the economy and what the government pushes through. If you look at the fundamentals of India, India is the fastest growing large economy in the world. We are currently the fourth largest economy, will soon become the third largest economy. So that way, the attraction of India is definitely there for a set of investors, and they would definitely look at India from a long-term perspective. Now, that said, if I look at specifically the union budget, I think there are some measures which are there which will actually engage India or entail, make it more attractive to foreign investors. So one is there are measures to promote India as a global financial hub, especially through incentives at GIFT Cities International Financial Center. So we have for NRIs and non-residents, there is this measure around the portfolio investment scheme. So the PROIs, individual persons resident outside India, they can now directly invest in listed Indian companies through the PIS. Then they have the increased investment limits, which have been doubled from 5% to 10% of a company's paid up capital. Then in terms of gift city opportunities, there is an extended tax holiday which has been announced. There are investment options in terms of gift IFSC structures that are being made attractive for setting up family offices, funds, or investing through IFSC based AIFs, alternative investment funds. So some of these measures are there, and that can help catalyze some element of foreign investments here. But ultimately, I think the foreign investments will come in if the fundamentals of the country are robust. Country continues to grow at a decent rate. The inflation is under control. The macro parameters, if they are robust, foreign investment will come in. And if I look at, say, you talk about the rupee. See, rupee, if I look at over a period of time, the depreciation has been 3 to 4% per annum. That's on an average. So in some years it may be lower, some years it may be higher. But over a period of time, it has not moved out too much out of that trend. So that is something which we need to keep in mind. Yes, there will always be short-term volatilities, but I think if I look at it from a long-term perspective, I think India as a investment destination still has its attractiveness to foreign investors.
No, certainly, sir. Let that be the story. Let that be the hope. No doubt about it. I also see, the focus specifically on the new age businesses, in this particular budget. I mean, it's not completely new, but I think where the needed attention, for example, container, the chemical parks, rare earth magnets or something like that, and some compensations there. I guess some incentives there. Do you think this activities, this incentives will also push the businesses side by any chance?
Yes, I think it was necessary. See, if I look at beginning with the rare earth minerals, rare earth magnets are actually very essential for motors and electric vehicles and generators and wind turbines. China dominates almost 90% of the refining and magnet making market. Now, by establishing what the finance minister has called as rare earth corridors, now what will happen is the economy will move from being a raw material importer to a high value component manufacturer, provided post extraction, relevant facilities, etc. are set up. Now, localizing production can reduce EV motor cost, thereby making green technology more affordable, and that can accelerate the transition to a net zero economy. High performance magnets are critical for also missile guidance and radar systems. And domestic production, if it progresses, will eliminate the risk of supply chain issues during geopolitical frictions and challenges. And we have seen a significantly higher revenue allocation of around 3,600 crore for fiscal 27. That is up from only 490 crores under the Ministry of Mines. That will promote indigenization of these rare earth minerals, aligned with, I would say, India's Atmanirbhar goals as well. In fact, if I look at other than the rare earth piece, we are also seeing the budget is recognizing the growing role of the creative economy, or the orange economy as it is called, as a source of skilled employment and export potential. The measures include the support for what they call as AVGC, animation, visual effects, gaming and comics sector. And that is projected to require 2 million professionals by 2030. Then we're also looking at strengthening of creative talent pipelines through the establishment of AVGC content creator labs. Around 15,000 secondary schools and 500 colleges are being targeted. So those set of measures should help. There is also a measure for the container sector because today, despite being a major maritime nation, India has historically relied on imports for shipping containers. During COVID periods, FY21 and so on, the world faced a massive container shortage, which spiked freight rates and hurt exporters. And here again, China accounts for 90-95% of new container construction globally, and its dominance has been increasing over time. So the new 10,000 crore rupees scheme announced by the government for container manufacturing, that aims to build a sizable container capacity, insulating domestic trade from global price volatility, and would boost competitiveness of exports in general from India. And of course, this activity will involve sizable labor, and thereby that will provide increased employment opportunities as well.
Right. I think that was a detailed one, sir, but I think the meaningful one, I personally liked one fact is they're going to open the girls hostel in every district. I think
Absolutely.
that will also, help boost the employment and those orange economy and part also, I think, that you mentioned.
Sure.
Sir, let me shoot one question in specifically two parts, specifically about the finances. The government has always given a support to the MSMEs. In fact, every government talks about it. But how do you think this whole 10,000 crore SME fund will translate into pushing the MSME? Because credit disbursement and credit deployment for MSME is always a problem. Do you think this will take them to the next level? And my second question related to finance is, how do you decode the high level banking committee specifically for Vikasit Bharat 2047?
Sure. Maybe I will take that separately. So, in
Sure.
terms of MSMEs, you talked about one scheme. There are a number of schemes announced for
Yes.
MSMEs. So, you talked about the 10,000 crore SME
Yes,
growth
10,000
fund.
crores. Yes,
Yes.
yes.
So that one is more a equity focused fund, and there will, of course, I would assume, be an eligibility criteria as to which SMEs will need to look at the fine print, which SMEs would get it. My sense is knowledge based, technology oriented, innovation oriented entities would get it more. We'll need to watch out for that, but that definitely is a scope to kind of help in the growth for NBFC, so that the number of NBFCs face equity shortages. So this will help in that kind of direction. There is also the existing Self-Reliant India Fund. There is a top-up announced of up to 2,000 crore for that. That will also help. There's also this entire proposal to facilitate professional institutions to develop corporate mitras in tier 2 and tier 3 towns to help MSMEs meet compliance requirements. And more importantly, I thought what excited me most was the entire measures around TREADS. Now, there are a number of measures around TREADS. TREADS will be mandated as a transaction settlement platform for purchases from MSMEs. Then there is a credit guarantee support mechanism, which is proposed to CGTMSE for invoice discounting. It's also proposed to link the GEM platform with TREADS to encourage cheaper and quicker financing. And again, another one is the measures around TREADS securitization. So by enabling securitization of TREADS receivables, the measure directly supports MSME working capital financing, where a number of MSMEs have faced challenges. So that is something we will look out for. That said, and it will, in some extent, if this succeeds, it can help deepen the bond markets as well, because we have 2.3 lakh crore of invoices already financed on TREADS in fiscal 25. And this measure can create a sizable and standardized pool of short tenor receivables securitized, which capital market investors can invest in. Of course, there are a number of issues which have to be resolved, like the origination frameworks, the transaction structures, what kind of operational controls. But if all these fall into place, then I would say the move is structurally positive for the Indian MSMEs.
Certainly, sir. I think those were the remarkable points, I think, that you mentioned, helped us understand and decode the budget. Before I let you go, because the next speaker is already here, just one last point. Do you absolutely agree with this fact that Budget 2026 is taking India forward towards 2047 far more seamlessly and in a faster manner?
No, I would say absolutely it is taking forward. As I said, my initial comments itself were around that. And I actually quickly cover 6 important dimensions which encompass the scheme. So Viksit has 6 letters. So let me take 6. So one is vibrancy of financial sector, the growth of the infrastructure sector, development on MSMEs, long-term energy security and stability is another aspect. There is a boost to innovation and digital public infrastructure, and lastly, bolstering the trade ecosystem. So all these measures should help over a period of time, help India move towards the Viksit Bharat concept.
Let's hope for the best of the Vikasit Bharat very soon, not just 2047, but before that. Thank you so much for decoding various aspects of budget and sharing your time with us. Thank you. Thank you so much.
Thank you so much. Have a great day. Thank you.
Thank you. So, dear readers and viewers, let me move ahead with another speaker who's a chief economist. I think she's a veteran specifically when it comes to the economy. Let me welcome Shubhada Rao on this particular show. Shubhadaji, are you there?
Hi.
Can you hear us?
Yes, I can hear you. I hope you can hear me.
I can hear you. I can see you. So tell me, what made you very happy? I can see the glorious smile on your face. What enticed you out of this budget?
Well, I think it's a long haul budget. Let's put it
Okay.
that way. It is not a budget for month one, month two, month three, but I think as very clearly articulated by the finance minister, it is building the blocks for a Vikasit Bharat. And that is where we believe that this budget has scored well. And since I heard the previous speaker also rate the budget, I would
Yes.
think if we were to keep an eye on the goal of Viksit Bharat by 2047, this would take the first few hundred steps towards that. And what really enthused us is the serious commitment towards fiscal consolidation, the commitment towards adhering to the debt indicator ratio, keeping the fiscal deficit well in the band of 4.2 to 4.4 and coming at 4.3. There was room and there was scope for the government to go even more harder on the fiscal consolidation. But given the kind of global uncertainty, the government still needs to handhold, particularly in the area of capex expenditure. And that is where we believe the government has done exceptionally well in balancing both the fiscal commitment requirement as well as supporting growth that needs to get done with a fair, equal distribution of attention and focus on sectors that encompass the traditional economy, that encompass the new age economy, the need of the hour. And given the kind of geo-economic fragmentation, geopolitical pulse across the globe, I think India has done well in delivering a budget which is one that would be more for patient capital and not the gaming capital as such for the markets.
Certainly. I think those were the remarkable opening comments, ma'am. Now, let me ask a very specific question on the fiscal deficit part. The government has successfully achieved its target of fiscal deficit. Do you think after achieving this fiscal deficit target, the capital expenditure plan they have made is good enough, or perhaps it could have been much better than what they have announced? And more importantly, is it that now the journey begins to reduce the debt to GDP ratio? Fiscal deficit ho gaya. Now let's move to debt to GDP now.
No, Bilkul, I think that is a very, very good question, Amol. Very pertinent, particularly when we are looking at the 5-year horizon of 2031. The path of fiscal commitments that we have made to get down the debt GDP ratio to 50% of GDP from our current, if I look at the latest budgeted number, it is at 55.6. And that is a 50 basis point correction from the previous year of 56.1. So are we getting, or are we gearing ourselves to be getting there on the path? I would think that this year and the coming year will be somewhat of a challenge for the government. This year, I say, because the private sector capex is still not as the front runner in terms of creating capacities. So the government, and that is understandable because you have serious global dislocations as far as risk appetite is concerned. So given that kind of a scenario, the government very realistically has continued to be the front runner as far as capex expenditure, capital expenditure is concerned. So yes, capital expenditure, we were looking at perhaps a lower estimate because we thought that probably the absorptive capacity from here on, let's not forget, last 5 years, the government has been pretty intense in pushing its capex program. And we think that there is a limited opportunity going into the next fiscal budget, simply because the asks on the revenue side will start mounting given the eighth pay commission requirements. And therefore, the government will have to balance revenue expenditure to counter the reduced capital expenditure starting the next fiscal year. So this was the limited window available, I would say the final window available, where the government could continue to push the capex program under its allocation of expenditures. How does one go about beyond that to achieve those fiscal targets? I think the economic survey, as well as some bit of indications coming in this year's budget numbers also, do suggest that the focus is going to be on asset monetization, which is on the government's program, and what the economic survey calls the equity monetization. There was a broad indication that the government would be open to looking at diluting its stake below 51% in some cases. So a public-private partnership in assets of or natural resources holding also could be on anvil. So I think they will have to look at more permanent structures of releasing resources to fund not just the pay commission outgo, but also creating a more efficient platform and engine towards growth. Because the moment the private sector comes in, it brings along with it efficiencies of the economy and so on. So I think going forward and over the next 5 years, that is going to be the ask. And government is well aware of that program. Therefore, if you see, the budgeted number is 80,000 crores for the disinvestment, with hopefully IDBI leading the course. And in the subsequent time, I think the financial sector, the government probably would look at, and it is in sync with what the government has been saying, of creating world-size banks, world-class, big-size banks. So some consolidation would be, on the agenda and so on in the financial sector space under the government ownership. So I think, it's all a very rational kind of number of steps the government seems to be taking, well cognizant of the fact that we have 5 years to make good of the commitment towards the debt GDP ratio.
I think a detailed one and remarkable point, Shubham, ma'am, there. But, I have my last question to you specifically. Obviously, the macro is absolutely fine. And in fact, it has taken care of macro. The good thing is there are not more subsidy schemes. They did not, go for a populist kind of budget. In fact, they focused on performance. The economic survey has also spoken a lot about, state and central connections and everything. But I think one part which I perhaps missed reading is about micro attention. There is hardly any attention on the micro subject or micro segment, ma'am. Anything that you think government has missed on micro, because there are still a lot of issues from rural to urban when it comes to the micro segment.
Yeah, I think, Amol, once again, a great question. I think from macro to micro is work in progress. It's unlikely that it will happen within a span of 1 year. I would say there are a lot of embedded elements in the budget, not just the speech, but also in the follow-up actions that do seem to suggest that there are, a process of gradualism has begun. The first case in point I would take is employment. The second, and I'll elaborate a little bit on that since time would be a constraint. Second is the focus on cities, urbanization. How do we bring in tier 2, tier 3 cities into the fold of modern infrastructure, be it hard or soft infrastructure, and so on and so forth. So from macro, we are now creating enablers in the micro, at the micro level, so that we focus on employability rather than just creating employment programs. Rightfully so, the focus is on skill enhancements. And I think my preceding speaker, Krishnan, spoke about it. So I'll just spend half a minute on that. All the training institutions, be it in health, be it in services, be it in the creation of the potential GCCs, the data centers coming in with the tax holiday being given right up to 2047. These are all creating micro enablers for employment enhancement. Okay, creating facilitation for tier 2, tier 3 cities by focusing on tourism, medical tourism, the overall tourism as a piece. I think is pretty much labor intensive. So there is going to be a micro focus. Beyond that, I think, as I said in the initial comment of this question, was there's going to be a work in progress kind of a nature. So we will see over the next 1 or 2 years, as I said, it is a budget for next few years, creating, even Krishnan talked of nuts and bolts. I would add to that it is more of a plumbing kind of a thing, removing hurdles, addressing transactional and procedural issues that were the bottlenecks, tax compliance for MSMEs, those have been eased. So there are a lot of good elements that that aim to remove the hurdles, and therefore allow the percolation of the macro measures to the micro kind of stakeholders. And to me, that is why I rate the budget high. The market reactions are always knee-jerk. Equity markets hopefully have recovered well, but yes, there would be some concern on the bond markets and in the rupee market. Being an economist, I cannot complete my conversation without having spoken on this.
Absolutely.
Bond markets, yes, there is a concern because the borrowing program was larger than what we were anticipating or the overall markets were anticipating at 13.7 lakh crores, including the treasury bills. So that has perhaps made the banking sector also a little bit nervous, and therefore the yields have moved up by 7-8 basis points. The rupee has been a problem, not just for this budget, but it has been underperformer compared to our peers. And that essentially, I think, is getting tied to a lot of external factors, external environment. Trade deals, I think EU was a great achievement, but I think, a lot of sentiment gets driven by how Indo-US free trade agreement will play out. Hopefully before March, we shall have the conclusion of it, at least the first leg of it. And to me, that will pave way for a positive sentiments trigger. And on a real effective terms, I think rupee has a room for appreciation, not depreciation. So rupee remains undervalued in the real effective terms. So there is scope, but I think for that, the global economic environment, particularly for the focus of India, needs to get better. My sense is Indo-US free trade agreement will provide that trigger as far as sentiment is concerned. But fundamentals remain absolutely strong. We have clean balance sheets. We have balance of payment. We have current account deficit, which is extremely manageable. The balance of payments, we have a good current account deficit issue. Current account looks good. The issues on capital flows, I think gross inflows on FDI remain good. I heard your question to Krishnan about that. On the gross side, FDI inflows are good. It is the repatriation which has depleted the net capital inflows on the foreign direct investment. Portfolio investments would continue to play the short term, whereby the earnings will come into the picture, etc., etc. Quarter to quarter, quarter tak का phenomenon hai. FPIs continue to play on that story. But if we look at the soundness of macros, inflation is extremely manageable and benign. Growth potential looks good. If you look at economic survey, the growth potential has actually moved up by 50 basis points. So all the building blocks are there. Sentiments need to get better. And I think it's a matter of time before India actually manages to achieve a whole lot of aspirational goals that currently stand with us.
Certainly, always a pleasure to listen to you, ma'am. It was really, really meaningful. Thank you so much for sharing time with us.
Thank you, Amol. Always a pleasure to talk to you. Thank you.
Thank you. Thank you. So readers and viewers, let me move ahead with my next speaker, who's from NAFID. Her name is Monica Kalia, who's the DMD at NAFID. Monica ji, are you there?
Yes, I'm there. Very much there.
Good to see you, ma'am. How are you?
Yes, very fine. How are you, Amul?
Wonderful.
Very interesting deliberations going on.
First of all, you tell me, ma'am, are you very happy because Finance Minister mentioned the name of NAFID in her budget speech?
Yes. And it happened twice in a row. Last budget also, we got some mention for the PCE, and now at least for that, they are happy that they created a good institution. So really a good feel to have.
Yeah, certainly. So the government has put a strong focus on infrastructure since many years now. And in fact, every year they have been increasing the public capex and specifically the infrastructure side, ma'am. So my question to you is, considering the strong focus on infrastructure, what kind of opportunities and growth do you see for yourself and specifically for the sector now?
See, what we believe is that, if India needs to reach to the next level of, get out of that mid-income trap, I think infrastructure is going to be the focus. We're happy to see the numbers, although, people are saying that, these are big numbers which have been put into the capex. But then, this is infrastructure-led budget, I would say. And actually, if we are talking about, a growth number of around 7% or 8% of the GDP, it can actually go up to 10% if the focus on the infra really stays long. And the private capex also starts, matching the public capex, what is coming in. So what is coming for us is basically, I think, a lot of many new opportunities which have been announced, with respect to dedicated freight corridors,
Yes.
the operationalizing of the national waterways, and development of the tier 2, tier 3 cities. Then we have data centers which are coming up, which have got, tax benefits, tourism, skill universities, and, whole of the health sector which is coming in. So these are all, the next part which I'll talk about is this is the lending opportunity. The second part which we talk is, the development of the bond markets. So the municipal bonds we have seen, in addition to the Amrut scheme which is going on, they have already given, 100 crore of benefit for 1,000 crore and above mini bond which may come up to the market.
Mhm.
And again, a new usage of the corporate bond with respect to the total return swaps which has come in. So
Right.
I think these are very good push. Now, all we have to see that private capex, while we say it is only the private developers who bring in the equity, but when I say the private capex need to match, it may be in the form of savings of the retail investors, which gets parked in the pension and the insurance funds. So that also need to get into the corporate bond market. So give it a right push. And we have seen the infrastructure. NPS coming down to the lowest level in the recent
Right.
past, and we can safely say that this particular segment has become risk free and coming up with the partial credit enhancement kind of products, and even now that new infrastructure risk guarantee fund which has been announced. So both of these combined together, I think they are kind of de-risking the risk which these long gestation period projects carry with them. So overall, a good push and a good intent again, once again, to make this sector very safe for the retail investors also to come in.
Okay, certainly. How do you see your borrowing now in the market? Are you going to raise more? Are you going to, disburse more?
See, disbursement safely, if we say, even with the present numbers where we have, we maybe, increasing our balance sheet size by another 40-50% safely each year. And with these new sectors which are coming up, which is basically the push to the data centers which has come up, the push for the dedicated freight corridors which has come up, the push for the tourism and the education sector which has come up. I think we have opened up much more than the existing things which were only the roads and the renewable energy. So definitely, I think it would be easy for us to see, 40-50% jump in our balance sheet size each year.
Okay, that's huge. That's quite interesting, ma'am.
Yeah.
Uh, you partly mentioned about the private capex. In fact, I have been trying to learn on this particular aspect from many speakers. So, give me also your perspective. When I mean, there was always a story that government should focus more on the infrastructure. Now, the government has been doing that. Government has been increasing its public capex, but the private companies or specifically private capex is not up to the mark. I mean, obviously there is some development there, but it's not still up to the mark. What is missing, ma'am?
What is missing is, basically, while, we have done fairly well at the center level, national level, what is missing
Right.
is, the state level or, going to the tier 2 and tier 3 cities. While we say that, they have Amrit scheme is going on and, 100 crore of benefit for 1,000 crore of mini bond, but the credit absorption capacities of these urban local bodies is really need to be enhanced. So capacity building at the urban local bodies where there are, no clear matching of the revenues. While, at the center level, you can always, if I talk about national highways, you can always, give a toll and, recover what you have spent. In urban local bodies, the revenue structures are very, very skewed. So typically this, the infrastructure risk guarantee fund will come very handy to to be used at that place. And it's like the money may flow given the structures are right. What developers are looking, what lenders are looking is basically the structures, revenue structures need to be set right there. And
Right.
I think for the absorption capacity of these urban local bodies to increase, I think we all know a lot of, governance aspects and the accounting aspects which need to be
Yeah.
cleared up. And, again, while the, intent of the budget may be good, but when we look at, Urban Challenge Fund, which has been announced in the last budget, we still need to see a shape which may come up to this, because the implementation risk remains the key.
Right. My last question in two parts, ma'am. Now, given the whole idea of Vikasit Bharat, the reforms that the government has done, I think they said that they have made some 350, more than over 350 reforms they have already made. Do you think that this budget might push private capex? That is first part. And second part is also India has been looking at the foreign investments, not the FDI side, but the FDI side since really long time. There were one or two deals that happened in the banking side, but after this budget, do you see some, the FDI blooming up, maybe going ahead, because the focus is on reforms, the focus is on Vikasit Bharat?
Yes, that will definitely go up. While we see those big bang things which may come up through, banking sector, which foreign investments are coming in, but then you'll have to look from the other side, all the InvITs. Who are the platforms who are holding these? These are majorly the foreign platforms we are holding it, or the Canadian pension funds, Abu Dhabi pension funds,
Right.
GIC and all. So it's not that it's not coming. And I think finance minister did mention that, the InvIT and the REIT structure will have to be used more extensively, because it is like ultimately the monetization of the wealth you have already created. So I think in that form, that will keep coming in major form to the country. And, ultimately the macros, if they are right, the flow of FDI is, automatic. And I think we are in the right space right now as far as the macros are concerned in the economy.
Okay, ma'am. Thank you so much for your time, and let's hope
Thank you.
not just macro, but your micro story picks up really well, and let FDI and the private capex also boost in this country. Thank you so much for your time and sharing
Thank
those
you.
meaningful thoughts, sir. Thank you, ma'am.
Thank you.
And the readers and the viewers, let me move on to my next speaker, which is the last speaker. But let me tell you, he's a CFO, and he will tell us actually the details about the manufacturing and how the budget is going to push on that side. Let me welcome Mr. Rajiv Gupta, CFO of KAI Industries. Rajiv ji, can you hear me? Can you see me?
Yes, sir. Good afternoon. Good afternoon, Amolji.
Thank you so much for your time, Rajiv ji.
Yes, sir.
So let me begin by asking you a specific question on the manufacturing private capex. I'm sure you heard the other speakers as well. The big story is, do you see the government's budget of 2026 is pushing the private capex manufacturing to the next level?
Yes, Amolji, very good, because this government is focusing since last almost 15 years now, because in the last 10 years, this government is continuous focusing on the setting up the infrastructure, because for any country to do a good business, it needs the infrastructure, whether it's a road or it's a railways or it's a ports. So this government is focusing towards, because of the capital expenditure allocation of year after year, it is an increasing trend of capital expenditure.
Right.
Because last year it was, revised budget was 11 lakh crore, now it is more than 12 lakh crore. So almost 11.5% they have increased the allocation for capital expenditure. Apart from this, they are allocating into semiconductor side and the data center side. So, and they are also allocating close to 2 lakh crore by way of loan towards the state for their infrastructure push up. So these things are required, actually basic requirement for any manufacturing setup. So in my view, by doing this, from the government side, they are improving the business environment. They are basically giving the platform to make the capex plan from the private sector side, because I am from the private sector side and we are the manufacturing. So we are more focused towards the supply side. So when there is opportunity, so they are building the opportunities also for all of us. So that's how we are allocating the capex budget, and we are going for manufacturing capacity increment. That's how we are going ahead.
Certainly, let me get more out of what you just said. The government has pushed manufacturing as well as services in this particular budget. I could see the container segment, the chemical segment, the rare earth magnet segment. These are the new age economies which the government has spoken about, and there is a push not only from the the support side but the incentive side as well. For example, data centers 2047. They don't need to pay any tax till 2047. Huge initiatives on that side. Now you are operating in, I think if I'm not wrong, more than 40-50 countries, and in a power and cable segment.
Yes.
Do you see that you are going to add to your capacities? Do you trust on these initiatives that the government has announced, and you think that perhaps there will be a growth in your business? Do you going to put up more plants? Maybe do you going to add more capacities? Are you that positive?
Amulji, we are very, very positive because we are operating in almost 65 countries. And since last 3 years, we were focusing in USA and Europe. Unfortunately, due to this trade war, in the US, they imposed the more duty, but in the European market, we are very well established. Even in this financial year, we are increasing our export almost by 50%. We are increasing our capacity continuously. We are expanding our 2,000 crore investment in the Sanand plant in Ahmedabad. And in next 3 years, next 3 to 4 years, continuously, almost 3,000 crore capex we have planned continuously. So we are more focused about the capacity building because the government is working and government is creating the environment for that, as I earlier said. You see, this government is more focusing towards the globalization actually.
Right.
That's why more and more reforms in the taxation part, which we have seen in the last budget, that they are reforming the taxation processes. Like they have corrected this dividend tax, like the buyback. Now they have again come to the long term, so that retail investors should not get hit for that. So this government is worried for all of us. But sometimes what happens, in a single year, everything cannot happen. So the government has to focus on one by one, sector by sector, state by state. So sometimes we may see that this sector has not given the push, or this state has not given the push. But the reality is the government has limited funds, and everybody has limited funds. But the role of the government is to create environment to have the opportunity actually for the private sector, which from where we belong, because we are catering to the capital goods, because we are
Right.
manufacturing wire and cable, and wire and cable goes to the capital goods consumption actually, and almost 3 to 4% capex requirement is the wire and cable. So year after year, we are continuously growing at a pace of 20% CAGR. So this means the capex is going on from the government sector as well as from the private side. You see, in a year, almost last year, close to 10 to 11 lakh crore capex was from the government side. Close to 4 to 5 lakh crore spent was from the state government side. So this much of spent was going on, and government was continuously attracting under PLI scheme lots of manufacturing hub for the electronic goods and the semiconductor, which is now the reality and everybody is accepting. In the yesterday's budget, they have given a strong push for the data center. You see,
Right.
once we want to be a global economy by 2047 and the strong economy and a developed nation, so we need to have a technology booster in the country. So that's where the government is
Yes.
basically innovating the new areas, and they are allocating and they are encouraging people to do in those areas.
I absolutely agree with you, Rajivji. There is no doubt about the growth story. There is no doubt about the positivity and the macro story. I also copy you on the investment part. But what intrigues me is if government is going to putting more than 10 lakh crore every year. In fact, this year it went from 11 lakh crore to 12 lakh crore. States are putting 3 to 5 lakh crore every year, which goes to more than 15-16 lakh crore as a public capex. If you could maybe highlight 1 or 2 points in terms of what is it that holding CFOs back from signing the check and put the private capex and add more capacities?
Sir, as a CFO of KI industry, we are continuously focusing on the capex. As I said, we started an investment 2,000 crore from last year, and so from in the current financial year, we will complete that 2,000 crore investment. Then the next capex we have already planned in our Baroda plant and in our Bhiwadi plant. So next 3-year capex is also close to 3,000 crore capex. So that kind of bullishness the companies like KI is having. So it is not only KI. So lots of so many companies in the country, those who are looking for that kind of opportunity, and they are continuously focusing on the capex. So you see, sometimes we are sometimes feeling from the stock market point of view, because stock market point of view we should not take into consideration for the growth, because sometimes it may be STT, sometimes it may be the basically the other political organizations, like sometimes they can move their funds to China, or sometimes they can move their fund to Japan or some other country. Right. But you see, it is if you see in the long run, it is also good. But now, in next 5 years, we will not be dependent on the FIIs. You see, as far as it is month on month basis, continuously FII is taking back the money. Who is funding that money? From the domestic saving, all the retail investor money through the DII. So we are building a very strong fund base funds in the country for the equity market, which will be enabler to the now the new they have announced for the municipal bond or another corporate bond. So it will be an alternative to a traditional method of financing. So that is available because of the encouragement from the government. The earnings are improving, and the government, because you see, I am happy when FII is moving out from the country, because at the long term we have to sustain on ourselves. So I am on that kind of personality, because we ultimately we need to depend on our domestic investor. So in next 5 years, if the FII are taking back and domestic are replacing them, so this means we are going in a very strong hand actually in future. So practically it is a very, very long-term strategic budget, and it's a very balanced budget this government has given, in my opinion.
Certainly, sir. Noted your points. Maybe last question, sir, before I let you go, which matters the most to the CFOs. So CFOs always talk about the compliance, the regulations, burdens, and I think the government, in whatever manner, I think they have been trying to relax the norms in their own way. GST rationalization was one part. Obviously, the more could have been done, but whatever they have done, I think the industry is happy with it, which I can see. In your view, because the government said over 350 reforms have been made, the compliance burden has been reduced. How do you see the ease of doing business? Do you think that this budget has spoken about it aggressively? Do you think the measures which the government has taken for ease of doing business will help CFOs like you?
So this, as I said, this government has focused on the tax reforms in the country. So this is again because the job of the government is to simplify the tax so that we can match towards the global organizations. Because if these global organizations are coming to India, they first need whether they are having that kind of accountability or the accounting treatment in the country, and they are having ease of doing business by way of tax or by way of the other sectors. In each and every sector, government is slowly moving towards ease of doing business. Government is implementing AI now in each and every field, where there are now the faceless the tax scrutiny cases are going on. So the government is more focusing toward data center, so they can build the AI, and the companies are using the AI for the compliance matter also. So these kind of push are there from the government side. Government are investing in those sectors, and the companies are also investing in the AI and the digitization and the analytical tool rather than only accounting. Now we are investing in the analyzing actually, and we are investing into the AI now.
Certainly, sir. Thank you so much for sharing those meaningful thoughts on this platform and decoding budget with us, which helped my readers and viewers. Thank you so much, Rajiv ji.
Thank you, Amolji. And we should be very bullish on our India. Thank you.
Thank you. Thank you. We all are, no doubt about it. Thank
Yeah.
you so much, Rajiv ji.
Thank
And
you.
thank you so much, dear readers and viewers, for listening to us very, very patiently. I see the major transformation in this budget with one aspect. All the budgets till now were specifically focused on rural economy and agriculture. They used to talk a lot about it, but I think now we have also moved on to new age economies and talking about the technology and new India. Let's hope the initiatives which the government of India has taken through this budget will help India march towards Vikasit Bharat far more aggressively and focus on micro story as well and not just macro story. Thank you so much for listening to us very patiently and watching this show on ETBFSI and ETCFO.com. Thank you.